Hello, and welcome to Managerial Accounting. My name is Dr. Annette Moultrie. Hello, and welcome back to Chapter 2, Job Order Costing. This is Part 3 of Chapter 2, Job Order Costing. And as a reminder, this video and all other videos on my YouTube channel is intended for educational purposes only. I do not own the copyrights to the materials presented. All rights belong to their respective owners. So in this video, we will discuss learning objectives 2.6 and 2.7. 2.6 is calculate cost of goods manufactured and cost of goods sold. And learning objective 2.7 deals with calculate job costs for a service company. As costs flow through the job order costing system, we go through a four-step process of accumulating, assigning, allocating, and adjusting. As you see here in Exhibit M2-10, it lists all the journal entries illustrated in the chapter. So transactions 1 through 3 are what you see here on this slide. Transaction 1 deals with the raw materials inventory, where there was a debit of $367,000 and a credit to accounts payable. Transaction 2 was the work in process inventory, where there's a debit, to that account, and a debit of $17,000 to manufacturing overhead, and a credit to raw materials inventory for $372,000. Transaction 3 deals with the work in process inventory, where you have a debit of $169,000, a debit of $28,000 to manufacturing overhead, and wages payable is credited for $197,000. Exhibit M2-10 also lists all the journal entries illustrated in the chapter, and you see here are transactions 4 through 6 on this slide. Transaction 4, the accounts are manufacturing overhead, a debit of $20,000, accumulated depreciation, a credit. Transaction number 5, manufacturing overhead, a debit of $7,000, and cash was credited for $7,000. Transaction number 6, manufacturing overhead, a $6,000 debit, and prepaid insurance was credited for the $6,000. Let's continue with Exhibit M2-10, where we have transactions number 7, 8, and 9. Transaction 7, you have a debit of $5,000 to manufacturing overhead, and property taxes payable is credited for the $5,000. Transaction 8, you have the work in process inventory, a debit of $67,600, and manufacturing overhead is credited for that same amount. Transaction number 9, you had the finished goods inventory, a debit of $644,600, and then you have work in process inventory credited for that same amount. Those are transactions 7, 8, and 9. We will continue with the other transactions. Transactions number 10 through 12. Transaction number 10, you have accounts receivable debited for the $1.2 million and sales revenue credited for the $1.2 million. That's sold jobs on account. Transaction number 11, you have cost of goods sold debited for $584,600, and then you have finished goods inventory credited for that same amount. Sold jobs, cost assigned to cost of goods sold. And then you have transaction number 12, cost of goods sold, $15,400 debited, and then manufacturing overhead is credited for $15,400. This is where adjusted MOH for underallocated overhead. Now, Exhibit 2-10 shows that the manufacturing overhead account has a zero balance. It has a zero balance after the adjusting entry. The materials from the raw materials inventory account were allocated to work in process inventory of $355,000 and to manufacturing overhead of $17,000, as we saw in transaction number 2 here. The goods transferred from work in process inventory to finished goods inventory, it represents the goods completed during the period. The goods were sold, right? The goods sold were removed from the finished goods inventory and appear as a debit to cost of goods sold. And of course, what you see are T accounts. Okay, here in Exhibit 2-11, it shows the schedule of cost of goods manufactured for Smart Touch Learning for the year 2027. The cost of goods manufactured totaled $644,600. It is that same value that is shown as a debit in the finished goods inventory T account that you saw in Exhibit 2-10. Here in this exhibit 2-12, which is the income statement, it shows the income statement for the same period. So notice on the income statement that the underallocated overhead is added in the cost of goods sold. Adjustment for underallocated overhead. So it is added in the cost of goods sold calculation so that the cost of goods sold on the income statement matches the amount on the T account. If overhead had been overallocated, the adjustment amount would have been subtracted. For example, in Granite Construction Incorporated 2016 sustainability report, James H. Roberts, the president and CEO, he stated that we have invested in advanced technologies, including auditing and data management systems, to further minimize our environmental impacts and deliver high-quality products. So the company used data analysis to track the root cause of environmental incidents that led to citations, and they took corrective and preventative measures to reduce the number of citations. A decrease in environmental incidents can result in a decrease in costs and an increase in profits, while also having a positive effect on the communities where the projects are located. Learning objective number 2.7. Learning objective 2.7, calculate job costs for a service company. So how do service companies use a job order costing system? How do they use a job order system? So service firms have no inventory, but still incur operating costs that need to be allocated to jobs. The hourly rate is found by taking the total salary paid to a particular employee for the year and dividing by available work hours per year. So the predetermined overhead allocation rate is calculated using an allocation base such as direct labor hours. The formula is the same as before. You have estimated indirect costs divided by estimated direct labor hours equal predetermined overhead allocation rate. So this rate is used to apply indirect costs to each job based on the actual direct hours used on the job. Here in this example, Fox salary and benefits total $100,000 per year. Assuming a 40-hour work week and 50 work weeks in each year, Fox has 2,000 available hours per year. So Fox hourly pay rate is equal to $100,000 divided by the 2,000 hours per year, which is equivalent to $50 per hour. So Fox worked 14 hours for client number 367. So the direct labor cost assigned to that client 367 is 14 hours times $50 per hour, which is $700. Now this direct labor cost would be recorded on the job cost record for that client number 367. Founding partner Jacob Walsh wants to know the total cost of serving each client, not just the direct labor costs. So Jacob Walsh Associates also allocates indirect costs to individual jobs or clients. So the law firm develops a predetermined overhead allocation rate following the same approach that the company Smart Touch Learning used. And the estimated indirect costs are shown on the slide that you see here. So the following indirect costs are estimated for 2025. Office rent, $200,000, office support staff, maintaining and updating law library for case research, advertisements, office supplies used, and the total indirect cost is $300,000. that direct labor hours are used as the allocation base. And the example that we just saw earlier with Walsh attorneys will work an estimated, say, 10,000 direct labor hours in 2025. So the first step is to compute the predetermined overhead allocation rate. So as you see here, the predetermined overhead allocation rate is $30 per direct labor labor hours. So you have your $300,000 estimated indirect cost divided by 10,000 estimated direct labor hours, which is equivalent to $30 per direct labor hour. And in step 2, you allocate indirect costs to jobs. So as you see here in step 2, a job with 14 direct labor hours would be allocated $420. And that is 14 direct labor hours times $30 per hour, which equals $420. Here on this slide, it shows the total costs assigned and allocated to the client that we talked about, client number 367. So the total hourly rate for the company is $80, which is $50 per hour for direct labor and $30 per hour for indirect costs. So if the firm desires a profit equal to 75% of the firm's cost, then this slide that you see will show that the price would equal $140 per hour. Okay, so this is the end of chapter 2, part 3. This is the end of chapter 2. This is the end of chapter 2. So please watch out for chapter 3. Chapter 3 deals with process costing. Please watch out for my next video. Chapter 3, we will discuss process costing. Thank you. Thank you for watching, and please do not forget to click the like and subscribe button. And if you have any questions or comments, please leave them below and I will reply to you.